Hi traders, I thought I share this video with you, and it will really be helpful video in your trading career. Watch till the end. I'm not the one who was actually teaching, but I thought it will really be helpful in your trading career. Watch till the end. If you are not subscribed to the channel, subscribe. Let's go.
All right, guys, welcome. Now that we've kind of gone through all of the initial first section, which was the market makers cycles, the weekly cycle, the intraday cycles, now I want to kind of go into the timing element and stop hunts. So this is where we're going to go with this section, timing and stop hunts. Knowing that time is a very important part of the strategy, knowing that you cannot really take trades if it's 4 p.m. Eastern Standard Time, as New York session is closing, so it's not like you just open your chart up and you're allowed to take trades anytime, right? You wait for London session and New York session in order to even take any positions in the first place. And this is where the stop hunts occur during London Open, New York Open. So without further ado, let's get into this. So these are the times that I want you guys to write down. And this is essentially, I do provide all the indicators and my template in this course where you can simply install all the indicators, take the template, install it, and you're going to have it on your MT4 platform. But sometimes the work time indicator, which is the boxes, the Asian, which is the boxes, Asian box, blue box, red box, New York box, sometimes they don't adjust to these timings properly. So knowing that, okay, 5 p.m., high-low reset, that's the market maker spread is set. 5 p.m. to 8 p.m., these are all times they're in New York, is the dead gap. That's when the expert advisors, that's when the algorithms, when the robots are trading. Asian session begins 8:30 p.m. and ends at 3 a.m. Gap time is 3 a.m. to 3:30 a.m. Now, what happens in gap time is the Asian market maker will get on the phone with the London market maker, and they'll talk about basically, where all the orders are. They'll talk about how much volume is going long and how much volume is going short. And if London market makers should stop hunt to the upside or to the downside, how many orders do they need to pick up? How many orders do they need to pick up? How many stops do they need to hit? All those things are spoken to within those 30 minutes. That's what gap time is essentially, okay? London session, 3:30 a.m. to 9 a.m. Gap time is 9 to 9:30. So with this strategy being London session and New York session are going to be the most important, and this is where we are going to be stalking the charts like a hawk and waiting for them to create the stop hunt for us to enter in the trade. New York session from 9:30 a.m. to 5 p.m. Now you should be out of all your trade, or you shouldn't be looking for any more trades after 11 a.m., after 12 p.m. noon New York time. So most of your trades should be taken around the beginning of London session and latest around 11 a.m. New York time. Okay? So let me make that a little bit easier to see. So you should be looking to be taking trades around 3 a.m., which is gap time. That's when you should start to look for the trades. And the latest that you should be looking to take trades is going to be 11 a.m. once New York session has already been on its way. Okay, so hopefully all this here makes sense. Okay, so our Asian and New York boxes, this is going to be important. So just because our Asian session is from this time to this time, right? Just because our Asian session, which I told you about, is from 8:30 to 3 a.m., that doesn't mean the blue box is going to be drawn at that time. So take note of this. And if the template does not automatically paint the blue box and red box at these times, then you must adjust it yourself. So the blue box, the Asian session, will start painting at the start of each day around 7 p.m. and will stop painting just before London Open. Okay, well, and it's going to stop painting just before London Open, 1 to 2 a.m. Now the red box, which is our New York session, this is going to start painting actually at the start of the US session, 9:30 a.m. and will end at 5 p.m. So these are times, stop hunts. Now the most important times are going to be 3:45 a.m. Eastern Standard Time and 9:45 a.m. Eastern Standard Time. These are called the Brinks trades. Okay, the Brinks trade is where the time is going to be the most essential, where these prime stop hunts are going to occur. 3:45 being the London stop hunt and 9:45 being the New York session stop hunt or reversal. Okay, this is where we pay attention to the 15-minute chart and look for all the rules to be met, catch the stop hunt, and trade without fear. Okay, so I talk about also about the market maker moving in threes, right? So 3 pushes to the high or low during the stop hunt, 3 vector candles to the high low during the stop hunt, 3 levels of rise or drop in the weekly and intraday cycle, which we should already know. 3 is a very, very important number because it's what they use to exploit our human psychology. And if we're seeing 3 pushes, we think it's going to continue. If we see 3 vector candles, we say, okay, 3 is going to continue going to the upside. This is wrong. This is why they use the number 3. So right here is what we see here is actually on EJ on the 1-hour chart. If we were to look at this, this is a nice M formation with TDI outside the volatility band back inside with divergence. Right here, you can also see it's a multi-session M. So that's a multi-session M and it was anchor pointed, right? The anchor point was locked in for the week. And we had an aggressive move to the downside. Now what we expect is this was level 1. So now what we expect is, right, we wait for Asian session. Right, we wait Asian session, okay, below 50 pips. And we wait for the stop hunt high and drop. That's what we're expecting. We expect this. And nonetheless, look what we get. We get 3 pushes to the high. Look at this. After here, 1 push, 2 push, 3 pushes. The 3rd push gives us a nice long pin right here to our 800 EMA. And you got him lights out to the dealer. Look at TDI. Touches the volatility band. Back inside. Divergence. TDI makes a lower high. Price makes a higher high. Okay? So all these things come into confluence. But before you even take any of these trades, you must understand that you must be in the right part of the cycle. That's why I preach to learn cycles first. Okay, same thing here is we were actually coming from a peak formation here on EJ. And what happened here is we expect a stop hunt high drop. So nonetheless, what we do, we wait, right? Asian session, London session begins right here. We already had our 1 push, 2 pushes, and 3 pushes to the high. Look at this pin to yesterday's high, the blue tracer. The blue tracer is always going to be drawn at here. That means that, yes, that was yesterday's high, which is right here. The blue tracer down here indicates yesterday's low. So this is a daily high-low indicator. Yesterday's low, yesterday's high. Yesterday's low, yesterday's high. Okay? So yesterday's high, or that day's low. Last day. So this is this day's low and this day's high. So, okay, that makes sense, right? Now we had this nice pin rejection off of yesterday's high. This pin grabbing the orders for its first leg closes below the 800 EMA, works the area for about 45 to 90 minutes, right? And right here issues our second pin, closes below the 800 EMA. Look at TDI here, outside the volatility band, back inside. Either both very extended overbought numbers. And we get in this trade after this bearish candle right here. Stop loss goes 15 to 20 pips above the high. We can take our 50 pips, or if we know where the cycle is going, we could take out one order at 50 pips, move our stop loss now into profit or break even and hold for the remainder of the cycle. Okay? So EJ right here, take a look at this. So number one is I want to show you kind of start seeing the bigger picture. On the 1 hour time frame, this clearly shows a peak formation and the way that I teach it, looking at all those different aspects, right? So on the 15-minute time frame, we also had what? A head and shoulders pattern. Head and shoulders identifies peak formation. Then once price moves away from the area and confirms that this is level 1, now what we expect is, right, we have our Asian session. We expect them, they're accumulating their orders. We expect them to stop hunt low towards the peak formation, and we trade away from the peak, in line with the peak. So we expected this, didn't quite get to our stop hunt box. Now our stop hunt box is 25 to 50 pips below or above the Asian range. So it will automatically be painted 25 starting from here. Starting from here, this is from the top of the box to right here. That right there, that distance right there is 25 pips, okay? Now from here to here, that's going to be 50 pips. And this will always happen, right? The indicators are coded that way. And this is how we catch our prime stop hunts. Now, 1, 2, 3, right? 1, 2, 3, 1, 2, 3. Notice the 3, 3, 3, 3, 3. 3 pushes to the low. TDI stop hunt, look. Outside volatility band, comes back in, taps the volatility band, and trades away from it like that. Look at this pin right here. And then we had half a railroad track right there. We enter into this trade. And notice how it happens during around 5 a.m. New York time, almost going into New York session. This actually happens later. This is around 7 a.m. New York time. Notice that most of the trades that we take are always going to be in between the blue box and the red box, which is London session. Which is London, L for London. And of course, this is New York session. All this contained in here. Notice how it pins off this 800 EMA right here as well. Guys, once you start seeing this on your charts as well, it's going to start opening up a lot of different things. And you're going to start seeing Forex in the proper way that you should be seeing it. Okay, guys, so that was it. That was that for this introduction now to the stop hunt and the timing. And there will be more. So stay tuned, and I'll see you in the next lesson. Thanks. All right, welcome guys. It's Nick with MarketMakersMethod.com, and let's continue this course. This is going to be more under the market timing and stop hunts section of my course. And the prime focus of this is we're going to go straight and attack to our charts here live. And I want to really show you actually a trade that me and my team actually took. And what I want to actually, I'll show you that at the end, actually live. It happened on the pound yen, which is my favorite pairs to trade. But what I want you guys to really get from this is the timing element. And then, of course, I'll go through all the different concepts of what we're looking at. And I'll just be going through the charts and, going through my mindset, what I'm looking at, so you guys can get a feel of, what my thought process is. But to start everything off, guys, I'm going to start with the timing element. Now, notice that most of the trades that we'll be taking in the proper stop hunts are going to occur outside of the Asian session. So they're going to occur, we always wait for price to start the London session. Now, this is still inside of the Asian session, and then the gap occurs around here because our box is going to end at 1 a.m. CST, or 12 a.m. Eastern Standard Time. So the times that I gave you for the boxes, which should have been in the previous video with the slides. So the times, as I said, the blue box, right? The Asian session is going to start painting around 5 to 6 p.m. New York time, and it's going to stop painting just before London open, 1 to 2 a.m. New York time. For me, I have mine set to 1 a.m. Eastern Standard Time, New York time. Okay, and London session, of course, begins 2:30 after the gap time. So London session is going to occur a few candles after the Asian session, the Asian box. My bad. Okay. So now what I want you guys to take away from this video is notice that, like I said, all the trades will happen after the blue box and in between this area and around the first third of the New York box. And once we kind of get into the in the second half of the New York box around here, the price will start to consolidate and they will start to accumulate and go into the gap time and then into the spread, market maker spread. Okay, so with that being said, let's kind of go through everything that we see here on the charts. Well, we see a peak formation, W formation on the 1 hour chart. This could be identified. And then we have the crosses of the EMAs. Now we are long-term to the upside, right? The position of these moving averages, now we are to the upside, and price is going to start rejecting off of the EMAs for the stop hunts, level 1, level 2, and continuation. So now, as we kind of go through this, let's see what we expect here is a stop hunt low and rise. So we don't take this W because it's not quite in our timing element. So once we're here outside of the blue box, we expect a stop hunt low rise. Now, nothing is more important than being able to see the pattern yourself and expecting the analysis in advanced. So we do have our W formation, which is in there. It's not always going to look like this. Otherwise, it'd be way too easy, guys. And of course, we are not taking this M formation against the peak formation. We are not taking that against it. We're taking only trades to the upside. So from here, we have our W and we go to the upside. We're going to kind of go through this quickly. We're still expecting a further rise. So we expect this right here. 1, 2, 3. Don't fall for this. Remember, we're expecting only stop hunt low rise. We're expecting rises only. If this simply doesn't make a stop hunt, this is called a straightaway trade, right? When it doesn't make any stop hunt that's quite visible, I recommend you not to take it. I recommend you wait for the stop hunt, or at least wait for TDI to show you. Wait for TDI to confirm that there's something happening, that there's a stop hunt. And this is what we exactly get. We get TDI outside volatility band and back inside. This is a M formation. Look at this pin right here, grabbing the orders, and you go to the upside after this candle. Stop loss goes to 20 pips above the low. And you can target your 50 pips if you want. And you move your stop loss to break even or in profit. And you can hold this remaining of the trade. When we take our trades, which will be in Forex Basics section, we usually open up more than 3 trades because we like to take more than 3 take profits. Okay? So now with that being said, let's continue moving on, and we're still in an uptrend because the moving averages are below price, and we keep on rejecting off and rejecting off. And that's the further side of the trend. Now, let's simply come here, December 20th, right? Let's switch over to the 1 hour time frame. Obviously, on the 1 hour time frame, look at the moving averages. Price is trading above both moving averages. We are in a clear uptrend. And to further recognize this as being uptrend, here is our peak formation. Look at this. So we have our shoulder, head, and shoulder. TDI comes right to the volatility band and bounces off of it. And ever since that, these moving averages have crossed over the 200 and the 50. We've been moving to the upside ever since. Notice our PSR is drawn here. And if we extend it, PSR comes here, spikes below it, and this peak formation is going to hold. Okay? So let's go back to the 15-minute time frame because I want you guys to recognize the timing element of all these trades. So where were we? We're right here. And what we got here again is a very tight Asian range. We like to see Asian ranges below 50 pips. So I did take that indicator off because I don't really need it anymore. I usually just measure it myself manually. It just looks more clean on the charts. 26 pips, this Asian range. What do we have here? We had a pin directly to the stop hunt zone. Then we come down here and have our second leg. Let's zone in here. And what is the timing element right here? Well, this is during London session. This is in the middle of London session. Perfect. Okay, the timing element is met. Great. Now we have our TDI coming outside volatility band, spiking below the volatility band, and then spiking back inside, closing inside of the signal line. Then we break the market baseline. Then after here, we come back in and we can exit the trade. Once we obviously break and we can add more positions right there, right? If you guys already took the TDI course, the TDI section, okay, here's our first leg, come back here, accumulate the orders, bam, we're gonna get a second leg issued. You get in right here or right here if it's not too late yet. Stop loss goes 20 pips below the low. You can know where that is, right? Since this is GBP AUD with a very high ADR, the ADR is 528. What that means is that the 3 times ADR means that it's likely to move 500 pips in one direction for this week. It means that a cycle from peak to peak is supposed to be measured around 500 pips. And I did cover 3 times ADR in the cycles video. Notice the timing, notice the EMA. Look, notice that the mustard is still trading below the ketchup. And then right here, the EMAs cross. Bam, right here. The 5 and 13 EMAs cross. And then look at this. Once it broke out of the volatility band right here, we can enter in more positions once we actually had the signal. Then once it crosses back in the volatility band, boom, we exit the trade. I mean, it did continue more to the upside, and you'll see because the cycle is longer term, you could stay in, but I'm showing you how to implement everything. Now let's continue. So what we are expecting here is a continued stop hunt low and rise. Now we didn't quite get this here. We did get a cord of wood right here, but it's not a visible W formation. And then we come here and we have this large W formation, which is an anchor point. And here's a safety trade. Safety trade meaning that we expect once we have an anchor formation locked in, a peak formation locked in, right? A peak safety trade is level 1. So it's the first stop hunt low rise. And notice the timing element. 1, 2, 3. W formation, TDI, enter into the trade, EMA's cross right here. And we can exit right there. This is well 200, this is well over 80 pips. This is 100 pips up here. Kind of looks like Pac-Man. No, I don't know. I'm just teasing with you guys. Let's continue. Want to focus on the timing elements, okay? Boom. Outside the Asian session. What is the Asian range? Let's check it. Okay, it's 33 pips. Not quite, it's below 50. That's good. So the stop hunt's quite visible. So notice how this W formation here occurs at London. And what do we really get here is we don't really have 3 pushes. We have 3 vector candles, right? Vector candles being longer than normal candles. So, and believe it or not, on GBP AUD, these candles are each be about like 15, 20 pips each. So One candle, two vectors, and then we have our final vector right there. Look at TDI. It gives us a head and shoulders pattern, actually. Shoulder, head, shoulder. I hate this drawing tool. Okay, come here. One more hit, amputate this shoulder. We don't need it because we trade W's. We don't trade head and shoulders. We specifically trade this, and this is the second leg. You should have already been in right here at this railroad track. But for further confirmation, they did come down one more time and test this level with 4 spikes. And then they continue to the upside. Notice the expansion of all the EMAs. And the EMAs did cross over actually right here after this candle. But your stop loss would have been way too large if you got in right here. But once again, notice the timing element. This happens. This is around 3 a.m. And this is around 3:30. a.m. New York time. Okay? Once again, now this trade right here is very unique because once again, let me zoom out so I can show you guys. And yes, this today, this was quite a crazy day for the pound pairs. GJ dropped over 500 pips, or it was 700 pips in one day. So yeah, I'll show you where we how we identified of being able to be in that short trade. Of course, the second leg occurs right outside of our blue box, which is good and safe to enter. Look at this. TDI comes here. It is right outside the volatility bands. Second leg basically is contained inside the volatility bands, and it's good to go. Your entry right there. Stop loss about 20 pips below the low. And notice the 5 and 13 crossover. Notice the TDI crosses the signal line, across the market baseline, then it crosses the volatility band. Then, of course, well, we do get somewhat of a back retracement in here, but we don't use the TDI as often to exit and enter out of trades, because once the pattern is set, you move your stop loss. Once your trade is in profit, about 20, 25 pips, I always recommend moving your stop loss into break even and letting the trade ride to your initial take profits. Now, notice how you wouldn't really get out of this trade until the 5 and 13 cross back over. And you didn't get this until this candle right here. This is when the EMAs crossed over back to the other side. This trade right here produced a good amount of pips. This trade produced about, to the top, 200 pips, give or take. If you got out here, it'd be around 120 pips. Not too bad, right? So then again, if you look at this price action right here, now this timing element is still good because this is still the first half of the New York session, red box, I mean. And then, of course, what do we have here? Look at your TDI coming here, kind of a head and shoulders. You see that? Here's the other shoulder, and here's the head. See that? Interesting how that happens. EMA's crossover right here. So hopefully this was good in terms of showing you guys the timing elements into perspective, because I don't want you guys to be trading when price is already second half of New York or during the gap time. I want you guys to be taking trades specifically from this to around right here to around the halfway of New York session and right outside the blue box. This is the prime entry if we're going to be taking trades. And it's anywhere between here, like I just described right here, is not going to be quite profitable. It could be, but it's just kind of gambling, okay? That's not the right timing element of the strategy. So hopefully this lesson kind of went through that. And I did, drop some more knowledge in terms of everything with the strategy. And we'll see you in the next video, guys. Thank you.